Hi, welcome back to Hawaii Turo. I don't know how you found me, but I'm glad you did. If you're wondering what is Turo, Turo is an app and a website where you can rent out your personal cars to strangers. I know it's crazy, but you can do that. I made this channel that will help you do that. I go my tips, my tricks, and my stats to help you maximize the money you can make and also understand the ever-changing rules and regulations with Turo. So if you are a new host, you're a host that just needs some help, I would say look in the description below, check out my Patreon, or go to my channel and you can see join my channel memberships, and it will link you to my Facebook, my private Facebook group, and we can talk there and do all the video chats, Skype and Zoom, and that will help you. And also my description below, everything that I use to run my business successfully for 4.5 years is there. You know, that wash and wax, I think that's a must-have. Trackers, a must-have. OBD reader, I believe that is a must-have. But all that is there. But yeah, let's get into this video. So, if you're wondering why you picked your insurance plan, but you have no idea which insurance plan is going to make you the most money in the long run in this business, I am going to help you with those questions. I'm hoping by the end of this video, you understand which insurance plan you would like to use for your business. But yeah, let's get into this video. So yeah, first thing I'm gonna say, put in the description below which insurance plan you picked and why, right? And it might change at the end. So the first insurance plan is the 60/40 plan, right? The 60/40 plan, maybe you're like, oh, this is really good. So a 60/40 plan, so it has $750,000 liability, which is on all of them. The one thing it does have is no deductible. I know it's big. You know, people see that, you're like, oh, no deductible, that's good. It also has the loss of use, it has the rental car replacement, and it pays for wear and tear, right? So those three things are pretty big. You know, the wear and tear, normally anything less than 3 inches is considered wear and tear, and Turo doesn't cover. So with this one, it says does cover, but I couldn't find on there like where it says like what it actually covers. Does it cover everything or not? So I think that might be a case by case basis. But the rental car, they pay you $50 a day for 10 days. Basically, they pay you while your car is actually in the shop. Then loss of use, they go back 60 days and get your average, and then they find out how many days reasonably that your car is actually going to be in the shop. Not when your car is sitting, but when your car is actually in the shop. And the max they pay is 30 days, right? So whatever number that is, that's what you get on that 60/40 plan, right? So that's good. People see that, I think it's really good, and it's, good. But the next plan is the 75/25% plan. So this plan, thing it has is, the $750,000, liability, of course, but it has a deductible, right? So it's the smallest deductible. It's a $250 deductible. I don't know, it's small, but it's the deductible. It does not have loss of use. It does not pay for wear and tear, but it does have car replacement. The car replacement is $30 a day for 10 days. That's the max, right? And the next one we get into, this is all the new stuff, is the 5%. The next one is the 80. So the 80, yes, it has $750,000 liability, but the deductible is $750. So that's a little, it's a little big, if you can every claim. It is what it is. And then that's basically all it has, right? It doesn't have any other stuff, the wear and tear, loss of use, rental car, doesn't have any of that. Then the next one is the 85, the new 85% plan. Of course it has $750 liability, but this one has the $1,625 deductible. So now the deductible is even bigger, right? The deductible is even bigger. But the next one is the big one, the 90%, where you collect the most of the rate, which is like, wow. But it has the biggest deductible, $2,500. Right? That's the biggest risk, go big, go home. But that's the biggest risk. So, you look at these, I'm pretty sure you've looked at all of these and you've picked one accordingly for whatever your situation is. And I am curious, right? Let me know in the comments below why you picked it. I know before I said which one you picked, but why did you pick your insurance plan? Why? Because in the next part of this, I'm going to go over each one and which one I think that is the best for where you at doing Turo. right? And then I'm gonna ask again. I'm curious. After all that, which one would you choose? Would you change it? That's something I bet you it might change. But yeah, let's get into that. So now, right? You understand what all the insurance plan. So let's get into which ones I pick, which one I think you should pick. So on the 60/40 plan, this is a plan that a lot of people look at when they're first starting, and they think that this it says that it covers most things, it's the best plan for you. And I'm going to tell you it's not. That 60/40 plan is really hard to make money on. If you're trying to get into this business and you're just trying to cover your car note, just cover your car note and that's it, this plan will be for you, right? Giving Turo 40% of what you make is huge. Let's just take for instance, right? You have a car. More than likely, I know the rates are high right now, but not everywhere. Maybe you got a car that's $50 a day, and you're giving them 40%. That comes out to be about like $30 a day. So if it's booked every single day, you're gonna get a max of $900. That's before anything wrong with the car. Let's just go with there's nothing, which is perfect world. There's nothing, obviously just taxes. You're $900. So whatever your car note is, let's go. You're probably only gonna be making like about a few $100s over your car note in your insurance, right? That's about all you're gonna make for regular cars. That's really hard, but you cover the most, right? So that works out only, if you have a nice car, you just want to get a really nice car, and you just want it rented out, maybe like 15, 20 days out of the month, and you can drive a little bit. That's good for you. This works out for you. But anything else, right? So you're gonna have to go to the next one, which I'm gonna talk about obviously later, But this plan, if you're trying to make money on this plan, what you're gonna have to have like a Tesla, something where it's commanding about like $200 a day and up. That is where you can start making money from this plan, right? Simple as that. Like that's where you can get minimum $100. That's like $3,000, $4,000. Your net. Not net. Your gross, right? You get like that. That's where you make money. That's for the people who have those kind of cars. This is the plan that they use. Yeah, simple as that. And also with this plan, it's kind of like a false sense of security reading these things. They say they pay for wear and tear. But it doesn't say like 100%. It says eligible wear and tear with asterisks and stuff. So you really don't know. It's about hit or miss, right? And they still hit you for pre-existing. So you have pre-existing stuff on your cars. They're gonna minus that when you try to do, your damage claim. And I guarantee you're gonna be mad on that 60/40 plan. You've been paying it for months and months and months. You have this big claim, and they minus thousands of dollars because of some small little thing that has nothing to do with that, right? Do you want that? Do you want to deal with that headache? No. So that's why I'm saying that's not the plan. So the next one, this is the plan that I think every single body new should be on. The 75-25% plan. That plan, hands down, is the starter plan, I believe, right? Simple as that. It has a deductible, but it's small, right? It's 15% more, means you can make more money. So the whole point of this plan, if you're new, right, if you want to move into like, the 80, the 85, the 90, this is the plan to do that. You need to get data. You need to see your market. Is your market going to have a lot of claims? Are you renting to tourists? Are you renting to locals? Which one is higher? Which one's lower, right? You need to find out these things, and this is the plan to do that and then move on. Or you can just stay here, right? If you don't get a lot of claims, more likely you can move up. Right, that's great. Or if you do get a lot of claims, $250, that's a small amount of money. Yes, it can add up, but also with this, which I think probably the next one, right? The next one to do, you need to, which I'm gonna, and then in this plan, right? Yeah, this plan is a starter to move up. If you move up, which I'm gonna get the next one, I'm gonna go over what you need to do, right? So let's go to the next one. So the next three plans, you got 80, you got 85, and you got the 90. These are the big plans. These are the plans where you make the most money, but that has the most risk. High risk, high reward. That's how life is, right? That's $750, $1,625, and $2,500. Those are the three, right? So when you're getting past the 75% plan, I think you just shoot all in 90. I don't really get the 80, 85, but you can pick those. But I believe go straight to the big one, the 90% plan, which is what I've been on for, for a long time, for years and years and years, right? 16 cars. This is the plan that you need to be on. But you got to understand how to navigate this plan. This plan is not easy. You got to have a plan. You got to execute it every single time accidents happen, right? First thing you need to do, you need to get them to understand that they are either paying out of pocket or they're using their insurance, one or the other, right? So either way, they're going to get charged either by you or by Turo, regardless, right? You need to get this stuff in messaging. You need to, have a clipboard. You can send these messages, which I send to every single body about their insurance. They decline, they take the minimum standard. I don't say anything is $500, but those two decline and minimum, I send standard messages to them, right? Because they think their insurance covers, a lot of them don't. We need them to understand that they need to pay, because they don't understand. They think their insurance is going to pay, and then something happens and their insurance doesn't pay. They won't be ready for it to pay, and maybe they'll just ghost you, and then you're left on the hook to cover max $2,500 per claim, and that sucks. In this business, I saw the numbers. Paying for out of pocket to fix cars, it's really hard to make some money. Really hard, right? What I do is I have a separate bank account, and I have I actually just call it a repair fund. I take out $500 every single month and I put it in there. So when it's high enough to fix a car, I fix the car, because, right, people rent your cars, especially cars that they've never driven before in their life. They don't know how to drive it, so they scratch it, they ding it. You can get them to pay. Well, these are the ones who don't pay, right? Or maybe it's just too small, but these are the ones that they don't pay. So I let it ride. Yes, it is what it is. A lot of my cars, they have damage on them. It's not major damage, just small stuff, right? Especially on the Mustangs, right? The clips on the bumpers, especially on the passenger side, right, in the front. People, they don't know the distance. The length of the hood is really long, and they tap it, and it breaks the clips eventually, right? Some of my stuff is somewhat hanging. It's not really hanging, like about to fall off, but it's not connected, right? Eventually, I will fix that, right? Eventually, I have like 3 or 4 Mustangs that have that problem. I know it is a Mustang thing, right? There are other things in my other cars that, but like I have a car like my 2013 Ford Fiesta on 85% plan. It gets door dings probably every single week or every other week. I don't care, right? I'm not even gonna waste my time trying to go after it. It's not even worth it. You just let those small things go on this plan. Whatever. The goal on this plan is just to make as much money as you can and make rid of the car. Simple as that. Especially if you bought the car cash, boom. Basically as soon as you make your money back from the car, and that whatever you get for the car, it is what it is. And that's the way that I think on this 90% plan. And this is the way you're gonna think. If you jump on this 90% plan, you're like, oh, you make all this money, and you don't really understand about damages, claim, you come out of pocket, or you think Turo is just going to pay for you, everything on that plan, or you think people are going to use their insurance. You're in a rude awakening. That's not how it works. I have come to the conclusion, what I just said, that's what I do. And I think that every single body on this plan has to think like that or get off of it. Stay on the 75-25% plan. That will be the best plan for you. That will help you. You'll still make money. Probably not as much, but you'll still make money. But it's easier. It's much, much, much easier. But yeah, I'm hoping, and I'm deep diving in this, man. I'm hoping that you are getting great information. I go over this stuff in my coaching even more in detail. So I'm just gonna say it again. You like what I'm saying? You want to be coached by me? Hit that description or the channel membership. We can get in contact and we can talk. One-on-one. But yeah, hit that subscribe button. I gotta say, because YouTube loves the engagement. Hit that subscribe button. Let me know which plan you pick now. Let me know which plan you want to pick, right? Did I get you to change it? Did I get you to make an actual decision on your plan? I bet you I did. I'm going to be watching these comments probably tomorrow because it is pretty late right now. I'm hoping that I helped you, in your business on which plan that you can pick. But yeah, watch this video right here, Turo 101, to help you as well. Wait till next week. You know what I'm going over? My money stats. I know you're waiting for it. Talk to you later.